How is everyone? Happy St. Patty's Day.
Happy St. Patty's, Sonia.
So let me get on my screen or share my screen. Hold on just a second. So today we get to talk about good old VA loans. Can everybody see my screen okay?
Yes.
Yes.
Okay, perfect. Has anybody, and I can't see everybody, so you're gonna probably have to just like, just say it, like unmute yourselves. But has anyone closed a VA loan since you guys have been doing this?
I'm in contract with one.
All right, good.
I have not, but I have a client that is looking to get pre-approved in May after she has her 30 days at her new job as a recruiter. So this is good info.
Okay, all right, awesome. Perfect. Anybody else?
My client got talked out of using theirs. I won't say who the loan officer was, but
Really?
yeah, because it was earlier last year when it was kind of crucial. A lot of sellers didn't want to be bothered with it, I guess, for lack of better terms. So they ended up going conventional.
Okay. Bummer. Yeah, I mean, I've been doing VA loans for, gosh, since I've been doing this, almost almost 20 years. And even last year I did quite a bit of VA, so I'm kind of sad to hear that. But I want to talk to you guys because I want to get you excited about VA because I absolutely love VA. I think it's great for the veterans. It has a little bit of quirky things actually with the new Form 33 that I talked to you guys, I think the very first time I was on here, but we'll go over it again. That's being a game changer with VA as well. So, so we'll start by, so VA stands for our Veterans Administration's Guaranteed Loan. So it's a federally funded loan. And max loan, so VA has kind of changed, just like all kind of loans have changed throughout the years. But I think it was about a couple years ago, it used to be where VA would have a max loan limit depending on what county you were in, kind of like FHA that we talked about. So a few years ago, that changed. So VA now, really VA rules are, there's no loan limit right now for any county you live in. But just like with other things, even though VA says or FHA says something, you have your investors as well. And they have sometimes overlays to where VA and FHA technically, for instance, doesn't have a minimum required credit score, but investors do. So for us, for max loan amount, we go up to 2 million, which basically somebody can go in with, or buy a $2 million home with no down payment, which is crazy. Zero out of pocket. Well, I don't say zero out of pocket, I take that back. Closing cost, you'll still have closing costs, but zero down. So when that changed, that was a little crazy for all of us. But it's helped our veterans get into homes, especially as prices have risen. So property type on VA loans are primary residence. So they need to own or occupy the property. PUDs, which we talked about those last time with FHA. So we look at those, it's planned unit development, but we look at those as single family residences. And then they can go into a condo, but like VA, they have to be, like FHA, they have to be VA approved. So sometimes those are a little bit more difficult to Google and find, but if you guys have a condo and you have a client that's interested in, and we're going VA, just email me the address or the complex name and or the HOA name, and I can find it out for you if they're approved. And if I can't find it myself, I have a condo department that helps me. They could dig in a little bit deeper and find out for sure. So one of the great benefits about VA loans, no down payment, right? That's a great benefit for VA. There's only 2 loans. Well, I take that back. We have 3. one just came out. It's a kind of a specialty loan, but USDA loans, VA loans, no down payment. We just released a doctor's loan that you can do 100% financing if you're a physician, with no mortgage insurance, up to 100% financing. So we'll get in that another day with kind of some specialty products, but there's not a lot of loans that you can do no down payment with. Also, another benefit with VA is no mortgage insurance. So as you guys know, and if you put less than, you're doing a conventional loan, putting less than 20% down, mortgage insurance is required. On a VA loan, no mortgage insurance, which is another great benefit for the veteran. Minimum credit score, like I said, kind of each lender's a little bit different. Standard kind of, all of us kind of lenders are kind of within the same minimum credit score. The more conservative ones, and you'll see those with probably credit unions, they'll want to see maybe a higher credit score, but our minimum credit score is, we could go down to a 580. But just like I talked about last time with FHA, there's other overlays that we'll want to see to kind of make the file a little stronger, because it's a riskier loan for the investor. We want to just make sure there's some, like we call it, compensating factors. And then the newest thing is no pest report or clearance needed. So that's that actually, and I talked to you guys about that very first time I was on here, because it was such a new thing that came out. Now we have what's called a Form 33. And actually, I'm going to pull it just in case not all of you were on here the first time. Let me see if I can pull it up. I'm not that great at the screen sharing, but I'm going to try. Oops. And we sent out, I believe Amy had somebody send out the form too by email. Okay, here we go. So this is the Form 33. This is and it's actually not a new form. Other states have used it. It's just for some reason, California, we have not used this form. And I don't know why.
Yeah, we don't see the form.
Oh, you don't?
No, we don't see the other page.
Okay, hold on. Let me see. Do you see it now?
Yes.
Okay, perfect. Thanks for letting me know. So this is, it's an MPMA Form 33. Like I said, this has been around. I know Arizona was using this form. I don't know why us in California have never used it, but really VA guidelines, all they really care about is if there's evidence of wood destroying insects. I think down the road, somebody, because pest inspections were needed for FHA loans as well. So I'm thinking down the road, it just was, that's what we needed, and we needed clearance, and everybody was okay with that. No one's really questioned it, as we, progressed in financing. So, so the pest inspector, or any pest company. So if you guys use Twin Pests or Shepherds, I think Cascade, they will do this form, and they know about this form. Some may charge an additional, I think Shepherd charges like $99 for this form. Twin does not charge any extra to get this form, but when you order the pest, which you'll still want to do, to protect your client, to also use it as a tool to, negotiate repairs if there's something on there that needs to be taken care of. But when you order it, you're just going to request this form. And the pest inspector will sign it at the bottom. The buyer and the seller will each sign it. And then if A is checked, if it says A, no visible evidence of wood destroying insects was observed, then we're done. Then that's all we need. I would recommend, if you guys are on the listing side, I know a lot of realtors get pest inspections up front. Go ahead and get this form, because that's just going to put you in a better position to be more comfortable, accepting a VA loan. Then you don't have to worry about, oh, we have to clear Section 1 and possibly Section 2. So do you guys have any questions on this form?
Well, some of the inspectors that, they don't know about this form. So I've had that issue.
Oh, you have? Okay.
I've had that issue
Um,
that they don't know, and they said they've never seen it before, and they just sent the regular stuff. So I don't know that this is widely knowledged by everybody yet.
who,
Well, we were in Alameda, so we used,
oh, gotcha.
yeah, but they don't know about it.
Interesting. Yeah, I haven't.
This form is, this is the form 33.
Yes. Mm-hmm. Yeah.
Thank you.
And it is new. I mean, I've had conversations. So I just had I closed a couple VA. So I've closed a couple in the last month with this form. Like I said, it's only kind of been out for, us using it for about a month. I've had to, and I've been trying to get out there and educate more people about it. But I've had to call the listing agent when we've submitted an offer, because the buyer on our side, they already know about this form from talking about it. But I've called the listing agent, and a lot of realtors, and sounds like inspectors, aren't familiar with it. So I will call and explain. And they were actually, pretty excited about it. One, this was up in Sacramento. One, she said she called her preferred lender, and he's like, no, I had no idea about it, but we just closed on this loan. So she was like, I'm definitely telling my lender about it, to see if they can take it. And that's the other thing, just disclaimer to you guys as well. People are still trying to catch up. Some lenders are still trying to catch up. So if you are working with another lender, ask about this form if they're familiar with it, because again, it does help make VA offers stronger and more competitive with like a conventional loan. So we definitely want to start using it. So I don't, and if you're doing a loan with me, a VA loan, I don't even want to see the pest inspection. I don't want to see it. So we'll just get that, and that's all we need. And it's we've closed 2 of them.
So what is a way, a simple way to describe this form to your client and why this form is beneficial?
So this is a form, and you can say it's for the lender. And
Okay.
the last agent that I closed, she was a Coldwell banker here in town, agent. She was trying to wrap her brain around it too, because she's like, well, how do I make, like, I don't want to seem like we're skipping over anything, or, that we're just trying to be sneaky or something like that. And that's not what this form is about. Like I said, VA only really cares about this exactly, if the wood destroying insects.
Yeah.
The other, when we did, pest inspections, and we had section 1, section 2, each lender was different on that, because an underwriter would review it and be like, I don't really like this, so we need to clear that. So it wasn't black and white for all lenders. Some just wanted section 1, some wanted section 2, depending on what it is. So this form is really just talking about the most important thing that VA cares about, and it's the insects, the wood destroying insects. But after we had this conversation, because I'm like, you're right, I could kind of see what you're thinking of. You want to protect your clients. So just like if you think about, just like on a conventional loan or an FHA loan, most people want a pest inspection still. Even though the lender doesn't need the pest inspection,
I
the
see.
clients want a pest inspection. So you still use it as a tool and a report for your clients, and you can
I
still
see.
negotiate.
Yeah.
So you can still negotiate.
But this is
whatever
all
you
that's
want.
required.
But this
at
is
this
all
point.
that's required for us
Yeah.
as a lender. So
Thank
we're
you.
not, it just eliminates the kind of, oh, there's a little leak under the sink, so now we have to clear that type of thing.
I see.
Yeah.
Thank you for clarifying that, Sonia.
Yeah. So let me go back to my other screen. Hold on. Oops. Where'd I go? Oh my gosh, the thing keeps moving on me. Hold on, guys. Share screen. Okay, can you see the slide again?
Yes, love the slide.
Perfect. All right. So the next thing is funding fee. So VA requires an upfront funding fee. And what this is, it depends. You can see that little chart right there in the corner. It depends on if they do put any down payment, and it depends on if they, it's their first time use or what we call subsequent use. So they can also be exempt. And what that means is when I talk to a client up front and I'm getting like our discovery call and I'm asking them a certain amount of questions, I'm asking them if they have a disability rating with VA. So if they are 10%, they have a 10% or more disability rating, they are exempt from the funding fee. So they don't pay anything. This funding fee, it's not, people get a little confused on this. It's not a out of pocket thing. It's added to the loan amount. So, so you can see if they put 0% down, it's their first time use, then they are paying 2.3% of the loan amount. So that's added to the loan. So they're financing it basically. You can see the subsequent use. So let's say they've used their VA before, they sold that home, they want to use it again. That's a subsequent use, and that would be at 3.6%. So that could be pretty hefty with, especially with our prices the way they are, you know, as they're increasing. So, and a veteran that is exempt can save, you know, some money for sure. Do you guys have any questions about the funding fee?
No.
All right. So the other thing I want to talk about, like a couple myths. So if you guys do, I mean, you're going to get a pest inspection. You're just going to add that form 33 for me. But let's say you do negotiate and there are some repairs on there that you want the seller to take care of. The myth is that the buyer, their veteran, can't pay for the repairs, and that's incorrect. They can, if they're willing to, they can do it. I've seen that a few times, especially with, you know, the way the market is right now and the aggressiveness. You know, sellers aren't doing much. They're kind of getting, you know, pretty good deals now. So, but they can pay for the repair and they can pay for the pest inspection. That's another kind of myth that I've heard over the years. Some lenders will still tell you that, but in California, the veteran can pay for the pest inspection. The other kind of thing that we'll see is, or I hear a lot about, is no money like out of pocket. So yes, there's no down payment, but there's always closing costs associated with a loan. So we can, you know, try to figure out where that's coming from. So some marketing is like, you know, VA loan, no money out of pocket. If you hear that, again, that's marketing too good to be true. We all know there's closing costs. We have to have an EMD, right? We have to do inspections. So all that takes money to do. Appraisal stays with the property. So VA is a little bit different when it comes to an appraisal, unlike FHA. So FHA, the appraisal stays with the property for 4 months. On a VA, the property is actually linked to the veteran, not the property. So for instance, and I've had this happen before, where a realtor will call me up and say, hey, Sonia, I have this other lender. They're messing up on the loan. They're just not getting it done. Can you take over the loan and help us and save it? So, but the appraisal's been done. That actually is very, very beneficial because I can just have that appraisal transferred over to me because it stays with the veteran. So we don't have to order a whole new appraisal. So that's kind of nice. One of the things, speaking of appraisals with VA, and this is different from conventional or FHA appraisals, and I'll probably do a day where we talk about appraisals and how that all works. But one of the big differences is on a VA, we have to order it through the VA portal. So we order it directly through VA, the appraisal. And then it's a random, you know, we don't have any, you know, we don't have any choice or anything on an appraisal who we get. It's very random. The one thing I do like about VA appraisals versus like conventional or FHA is that they do what's called Tidewater. And what that means is if the appraiser is looking at the property and he's doing his report and he just does not feel like it's going to come in at value, he'll reach out to us. We'll reach out to you guys, both buyer's agent and seller's agent, and he will want to say, basically, submit to me all the comps, give me something so I can try to get to the value that you want. So we'll have you, send us comps, any upgrades, anything that will help get us to that point. So then we submit that back to the appraiser, and then the appraiser makes the final decision. So that's different when it comes to conventional FHA, because they'll just do the report, give us the report if it's undervalued, and we don't like that, or you guys are like, oh, let's, I don't think that's right, then we have to do a rebuttal to that appraisal. So it's kind of doing it after the fact, where VA does it before he makes that final decision, which I do like. So do you guys have any questions on that?
No.
All right, that's easy. Okay, so who is eligible for a VA loan? So there's a few things we got to look at. Every single time when we pre-approve somebody, we ask for what's called their DD-214. And it's a military document, and it talks about, their discharge, if it was honorable, time served, that kind of stuff. And we submit that to VA, and VA gives us what's called their certificate of eligibility. On there, it will give us lots of information. One is, it will tell us if they're exempt or they're not exempt. It will tell us if if it's their first time use, if they're second time use. They'll tell us, like, I've had one just not too long ago where the guy had a short sale in I want to say it was 1991, and they did not restore his eligibility. So he had what's called an entitlement charge, and that means basically he owed VA money. Well, anyways, long story short, we fought that with the VA. I mean, he did a short sale, so he really tried to do the best thing. It was sold, lenders got paid off. It took us about 3 months, but we were able to, and because it was so old, they kind of just gave in. We hounded them a whole bunch. They kind of just gave in and was like, okay, we're just going to restore it for this guy. And it ended up, I was able to refinance him and save him like $600 a month. So the certificate of eligibility will give us a lot of information, and always, I mean, one piece of advice I could give you guys, because I've seen where this can hold up things, is, and we've talked about the difference between pre-qualified, pre-approved, fully underwritten. There's still a lot of lenders out there that do not pull the certificate of eligibility up front. And that has, in fact, has happened to one of my clients before, when we, on the other side of the transaction, selling his home, the guy was buying at VA, and the lender didn't pull the eligibility up front, and it held up our closing for about 3 weeks. So because
Sonia, is that, I'm sorry to interrupt.
Yeah, go ahead.
Is that eligibility something that I can get to my client, just get from you, or where can I get that and get that to my client to have them?
We pull that.
Oh, you pull that.
We pull that. So
Okay.
it's part of the pre-approval process. So after I talk to a client, like I said, I will ask for their DD-214, which is how we pull that.
Awesome. So that's right up front.
So that's up front. Yeah. That's why I said,
Great.
I would definitely, if you work with another lender and they're like, oh yeah, they're pre-approved or pre-qualified or whatever, you definitely ask if they have pulled their certificate of eligibility.
Awesome.
That
Thanks.
can bite you in the rear for sure. So besides what we see on that form, eligibility requires a certain thing. So the VA requires that you've served 90 consecutive days of active service during wartime, or you've served 181 days of active service during peacetime, or you have 6 years of service in the National Guard or Reserves, because that's a little bit different. or if you did, and then you were deployed for 90 days, that counts as well. And then if you are a spouse of a service member that has died in the line of duty. So I've done loans for spouses that have lost their significant other.
I have a quick question regarding that.
Yeah.
Would a VA loan apply to a spouse that is widowed? Her husband served in the United States military, but he was retired.
Do you know if he has a disability rating?
He was disabled.
Okay, then more than likely, yes.
Wow.
I
Okay.
could probably find out for sure,
Okay.
So again, she should have his DD-214. We can kind of do some, research and
Okay.
see. Yeah.
Yeah, she was asking me. I had another a good friend asking me that question, so I've been really curious if she does want to move eventually, if she'd be able to utilize the VA loan. So thank you. I'll send her your way if she comes to that junction.
Perfect. Great. I would love to help. So the other thing, so on a VA loan, so the only person that could go on a VA loan is a spouse. And they don't have to be in the military, but if they're legally married, a spouse goes on the loan, or two veterans, and they could be friends. They can be, I have one going right now that's a daughter and dad, but they both have served and they both are eligible. So we can do what's called a dual entitlement. And they kind of use half each, they share it. So that's kind of, I probably have done maybe 5 of those in all these years. That's not usually that common. But you can, people ask me, my dad is a veteran and my sister wants to go on the loan with him, and that you can't do that. And then also for kind of like FHA, because we live in community property state, these are both federally insured loans for the spouse, even though if the spouse doesn't work, or maybe she's got bad credit, we still have to pull his or her credit and qualify that veteran with the combined debt, because California being community property state, it's shared debt between spouses. So that's kind of like FHA. They don't have to be on the loan though. We don't necessarily have to use a credit score, but at the end, they can either deed off or deed on the loan to have, interest in that property. But we do have to qualify them with the spouse's debt. So do you guys have any questions on any of that?
No, I have to hop off the call, but thank you so much, Sonia.
Yeah, you're welcome. That's pretty much kind of the basics of VA, so, you guys, again, I will, I'll send you a little, something by email, a little bit on VA. And if you have any questions, always feel free to reach out to me, but don't want to take too much of your guys' time, but hopefully you learned some good tips today.
I have a appraisal question.
Oh yeah.
I had a lender tell me that, like you said, that it doesn't attach to the property, but I had a lender tell me that it attaches to, like, if let's say another VA buyer came along for the same property, it within a certain amount of months, it would affect like another VA buyer. Does that make sense? Or is that correct?
No, it's specific to that veteran.
Oh, okay.
So and we actually get an ID number that we associate with, and we have to do some stuff with that on the back end. But no, it would stay with that veteran. So if that veteran like backs out of the house, is like, I don't want to buy this house anymore, or whatever the case may be, then if another veteran, they take another VA loan, then they would get another VA appraisal.
Oh, okay. All right. Thank you.
Yeah. All right. If there's nothing else, guys, I'll let you go to and enjoy your little St. Patty's Day. So don't forget to wear your green. So let me know if you guys need anything.
All right,
All
thank you.
right, thank
Bye.
you.